Hello and welcome back to the complete day trading course by Wealthy Education. In this video, I'll be taking a look at the MACD, or the Moving Average Convergence Divergence Indicator, to identify market direction. So the first thing that we need to do is plot the indicator. So we go to Indicators and we move down to MACD, not MACD Strategy, but MACD. And you can see that it plots the indicator here at the bottom of the window. And at this point, you'll notice that there are a couple of features here, if you will. And this is the histogram, and these are the two moving averages, with the blue being 12, the orange being 26, and the histogram being based upon the difference between the two. So the idea is, and there's a multitude of ways you can use MACD, but for directionality, a lot of traders will use it a couple different ways. They will use crossovers, just like a moving average crossover, because that's really what it is. It's just plotted somewhere else. At an extreme level here, you can see that we crossed over to the downside, and that was basically at the top of a significant move. We also crossed here at a pretty low level, and that led to buying opportunities. Crossed here, it's selling opportunity, buying, etc., etc. Now, the thing is if you're going to use the moving average crossover in the MACD, I would suggest that perhaps it's better off once we get to pretty oversold or overbought conditions. And while this isn't technically used for an overbought or oversold indicator, suffice to say, the higher you are or the lower you are, when these crossovers happen, the more likely you are to see the trade work out. So that's just an extreme. And, when you're at extremes, it makes sense that that signal will probably work out in your favor. There is also the histogram, and some people just use the histogram as whether you should be buying or selling, and then they'll use some other indicator on the actual price itself. So, for example, in this entire area here, you would have been looking for sell signals. In this area here, you would have been looking for buy signals. The histogram by itself isn't necessarily the most reliable way to trade it, though, at least from personal experience. There is also a zero line, which you can see that we flip back and forth from. And some people will just simply trade whatever direction the moving averages are. So as we cross here, they would be looking to go along here. And you can see that that does work. It gets you in the trade a little bit later, but it's also a little bit more conservative. So there's three different ways traders use it. Most that I'm aware of tend to use the moving average crossover at extremes and try to profit from that. Again, though, those three different ways do work. Let's go ahead and drill down to, say, a 5-minute chart and see how this plays out. So, same stock. This is Apple. You can see that we had a crossover that was extremely overvalued. A nice selling opportunity, went down to the gap, so you can definitely see how that played out, how you would hope and anticipate that it plays out. You can see the crossover here and the crossover there, so certainly that sell signal worked, and so on. Pretty straightforward. Again, though, and I suggest that this is probably going to be the case, but this entire area here, you're looking for buying opportunities. But like on a 5-minute chart, it really doesn't pan out as well. If you're going to use the histogram part, typically that's going to be a longer term type of setup. The crossovers at extremes, though, does tend to be a fairly valuable trading signal, if you will. You can also use the histogram itself for signs of divergence. And divergence is just simply when you are, for example, you're making higher highs, but the histogram itself is not. That could show signs of exhaustion. You can see we did drift a little bit lower. Now, this is a 15-minute chart. It's not so drastic. That's more of a longer-term chart thing as well. And it does work in both directions. So, for example, if the histogram, if we're going lower and the histogram, like here, is actually rising at that time, well, that's divergences as well, because price is going lower, the histogram is going in the opposite direction. It shows a slowing down of momentum. That's kind of a sidebar part of this indicator, but it is yet another way to use it. Again, though, extreme crossovers tend to be probably the most reliable. And then, of course, if you marry that with support and resistance or price action, then you start to begin to actually build a system